See, it's a good team.
All right, ladies and gentlemen, welcome back to another episode of Chart Talk. Got me and Bennett here doing the same damn thing every week. Bennett, you enjoy your little trip out to Denver this weekend?
I did.
Oh, I'm glad to hear it.
We had a good time.
We had a big little party. Bennett had these Nerf bullets that I'm still finding all over my house. And the rule was every Nerf bullet I find is $10 my way. Right now I'm looking at like $450. So I'm trying to get up to a G-bone by the end of the week. So we'll see.
Yeah, you send me the Venmo request. I'll make sure I.
Buddy, I will. Let's get into it. Market outlook. So, I mean, we're getting that kind of pre-election volatility. We've kind of just been, sluggishly moving downward the past couple weeks after, a great 3 weeks higher. And we might just be getting that pre-election volatility right now. Market started to sell off end of the day. We're gapping down now after hours. I'm seeing maybe Chicago's closing indoor dining or something. I don't know. We'll have to dig into that news later. But, I'm not really expecting much out of the market till after the election. We're going to get a lot of chop. A lot of headlines every day, a lot of BS. So, there's easy times to trade and there's hard times to trade. I would definitely consider this a more difficult time to trade. What are your thoughts over there, Ben?
You want to pull up that first chart and then we'll scroll through a couple really quick, though.
Gotcha.
All right. So first one, again, we talked about this in the past. We're in this range around market. It's been choppy. It's been difficult. I kind of drew these support and resistance lines out of where we're looking to take profit and where we're looking to add back. But the bigger thing is, again, leading up to this election. And I went back to the last few elections that we've had and just showed kind of how the market reacted post the election. So, Shake, if you want to.
Yep, I got last one up.
So the last election when Trump won, leading up to that, the big thesis was if Trump won, the market would crash. If Hillary won, the market was going to rage. The complete opposite happened. Market was down huge after hours when it was announced.
I was so short.
I know. Yeah, we have
crazy day.
We have the
the story.
The lessons on it. Yeah,
I forgot.
So the mindset of most traders going into that election was that if Trump won, the market would have crashed. If Hillary won, the market would have raged. The opposite happened. We had this Trump ride that followed. Going back when Obama was reelected back in 2012, we had about, Shake, if you want to scroll over one chart.
Yeah, I got it.
All right. So we had 1 or 2 down days and then again, back into, just post-election rally.
Right.
And then going back to 2008, the worst financial time that probably anyone watching this has experienced. Obama came in, was elected. We had a little bit of downside that followed. And then we had one of the biggest rallies that's, started in the last, 20 years.
The greatest bull run in history.
So, the major premise here is, and a lot of people that I've been talking with is.
Lucky, shut the hell up.
is that people leading up to the market or leading up to the election, they expect that the market's going to crash and everything's going to, you got to get in cash and get in gold, where it's easier to kind of stay the course than trying to reinvent the wheel because of an arbitrary date that's going to happen regardless.
I completely agree.
So with that, we can jump into...
And I'd like to say that this probably be our last chart talk for the election. Maybe we'll get one in. But I'm remaining super bullish for 2021. I think what the Fed's doing, coupled with the economic recovery, I don't care who wins. I think we're just set up in such a bullish environment for equities that I think 2021 is going to be such a great year, no matter the outcome of this election. So I'm not very worried. I think I'm going to go back to your last picture. Obama was reelected, where it got that first sudden down move. If it's a Biden outcome, I could see something like that, where it's like a quick down move, and then that macro bullish thesis would kick in later. So on a many months out, I still remain pretty bullish. I'm pretty excited for next year.
Yeah, and that's even for the average investors. Everyone's so focused on this one point in time when this election happens, and then once that is over, you go on with your life and you go back to whatever you're going to do regardless. You're not going to be too hamstringed on that, and that's just leading up to it. The last election, that was like a year long. It was just every day. That's what everyone talked about.
Yeah.
But with what's going on this past year, it's been on kind of the back burner.
Yeah. Sick fuck year. All right. What do you want to get into?
The first question is for Reed. He asked, do you see
what is the social media questions?
Yes.
All right. Back to the SPY. Go on.
So Reed was asking, do you see a cup and handle forming in the SPY?
With today's action and now with this gap down, I see what he's looking at. Let me draw it out a little bit. So the thing with cup and handles is you want this base period to be at least 6 weeks. That's what the textbooks will tell you. You want the people who bought highs, to people, what do they say? People to get bored of the stock, in this 6 weeks, 8 week base. And then when it makes that move back to highs, that's when people are taking profit. And then this would be the handle. And then when the handle makes an up move, that's when you buy. I'm not really seeing that in this pattern. It's not well drawn out enough. I like the outside the box thinking there, and you kind of like make some semblance of a cup and handle. But we're just in this headline driven environment right now. I don't see a cup and handle.
Okay, yeah, I didn't see one either, but I'm with you with that. Next, we have a question on Netflix.
Yeah, I'm hawking.
Just broadly chart wise, they gap down after earnings.
No, yeah. So normally, like gap downs are something to avoid, is what we generally say. We want stocks that react with a gap up on earnings, showing that demand. But Netflix has been, let's hit up a Netflix monthly chart. Look at the thing is fucking sick, So do I think? And now the question comes. I have to do this one hand. Hold on. Now the question comes. Do you think Netflix is going to break this major trendline support area? So right now, I'm thinking no. I'm more of on the bullish side, but if this area breaks, we could definitely see a down move to, 440, 400, whatever it may be. But I'm watching this area very closely because it's either gets right back into this trend and we'll see this thing back at highs, or it breaks that trend hard and you see the next leg down. So, I'm not sure which way it goes. I don't love when stocks gap down on earnings, but Netflix it's been a market leader for years and years. So, that would make me believe that, lean to the long side on it. So I'm watching that one closely with you. Yeah,
I like that even up back through 500, just in that range.
That's what I'm saying.
500 to 560.
Completely.
You get it up through 500 versus 480, you're risking 20 points, but you can get it up to 580. You're going to make 80 points.
Right.
You got at least 4-1 on that. But on the other point, you said how long they've been a leader. And I don't want to like jinx it, but
it could break down.
Yeah, no, I'm saying like for a name that we hate now, where if we think back to 2018, 2019. It was Boeing, and Boeing had this massive, flag or base near highs from 300 to 460, and it was just always that leader until it finally broke that support. And
Definitely true.
One of the biggest leaders to one of the biggest avoids that we've seen in the last couple of years.
Yeah. So. The one thing I'll contend with that is that it was a little news driven. I don't know if you heard of COVID, but and they're fucking killing people left and right. But whatever.
Yeah. But
I definitely agree, and that could happen, and we could see a change of leadership. Definitely something to watch for closely.
All right. Next up, we got a couple of questions for Anish. He had a question on this Baidu. Baidu and Snow.
Earnings coming up.
Had this
sick chart, just earnings coming up. But go on.
But these are we're going to go for, you can pull up his chart for Baidu under good trade.
Yeah. Oh, he's got one?
Yeah.
I got it. Whoa, okay.
So...
I remember him. Actually, shouts out to Anish because remember he asked us about this like 2 weeks ago, and I was like, oh fuck, Baidu, that's looking pretty good. Like, wasn't even on my radar, and then we killed this trade. So shouts out to you, Anish. Appreciate you, because he got ticked in and asked us about it. I remember it. Ticked in 127.50. This is a good trade. First kick, second kick. Oh, and he just got fully out. so what's his? All right, you go. Sorry, I'm just rambling.
That's okay. So his main question was for this, and then for Snell was 2 trades he took. Where in this example, he got ticked in, then he kicked that big green day.
Yeah.
But the problem is he rebought the following day. Basically, he bought 130 versus that 128, and it worked. So he's like, I got lucky. But he was asking like, how do you get back into a name properly versus he said he just kind of arbitrarily got back in, and it happened to work.
So no problem. So here's the mistake he made. He got back on the next day. He was just overzealous. When this stock came down for 3 days, held that 128, and then made that pivot on the 4th day. And that's when you got to re-enter on this pivot day, on the 4th day, where that green bar, you see that green doji? Mm-hmm. That's where he's got to look to re-enter against that 128. These other 3 red bars, it's not telling you it's ready to bounce yet. It's not giving you that price action. It's showing you it wants to bounce yet. And then it gave you some semblance that 4th day that it was ready to bounce. And that's really where you look to do it, where it turns that support to resistance. I agree with him. He did get a little lucky that this didn't tick below 128. But if he got back in this 4th day, I think that's more of a calculated entry.
Mm-hmm. Yeah, and that was the same thing. Like I was talking privately, I was like, you were selling it, 8 hours ago at 130 or 132, and that was your big idea. And then now it's, $2 lower. even higher than where you got ticked in. It just seemed, again, he got very lucky and it's working now. But take that trade 100 times and it's not gonna work out. And then for the next one is this snow. Again, very similar premise where you pull up the chart. He bought through 250 versus 240. He got some kicks off, 270, 280, 290, amazing kicks. And then this one, he waited a little bit longer. Again, this is an hourly chart. It's not like a daily.
Yeah,
but he let it pull back to that initial price.
Right.
But that same question of, when do you properly reload?
So even this one, he was a little early. It seems like his thing is he sees that retest and he sees it hit a price and he wants to get back in very quickly. He needs to see more of the reaction. I like how he's waiting on the price and he's price focused. Let's see if this area turns into new support, but he's got to let it show him more that it's turning into new support versus, kind of the first green bar. He looks like he bought back on the hourly. And, if this thing came in from 300 down to 250 in, what is that, 10 hours or so, it's not just going to rip back up. Or most likely it's not going to rip back up. You're most likely going to need to see some sort of consolidation around that 250. So a little bit early, but, he's doing the right thing, I think.
Yeah, no, he's always got great questions and, they're always very valid.
And you got me in Baidu, so shouts out to you, bro.
Yeah. All right. So Shake, do you have any trades you want to go for good trade, bad trade? And then I can go over the one or two that I have.
Yeah, sure. So, this U. This U is both a good trade and a bad trade. Unity. It's this thing is such a wide and difficult name to trade. Just kind of so that's the thing with these recent IPOs. It's like you really got to learn the symptoms of the name, the characteristics of the name, because they do trade so differently and so wild. And this Unity was a great trade. And then I'll just go through it. So I got the 30-minute chart up, and you can see the first entry. It's holding this. We initially got in the name here, kicked some, held some, and then shouts out to Joe to Frank. Me and him were in this one together. We bought on the retest here, then added for the breakout, kicking into strength. And then here's something I didn't really want to say that I was doing because I know it's just so day trader focused. This is what I did today. On the breakout, I added a few hundred shares, but now I'm up, I'm up big in the name. So I can risk, let's say I was up like 6K in the name. I can risk $600 on a quick breakout trade, and I don't have to be as, risk reward focused. And I could just look to make that cash flow trade. That's a conscious decision I was making, but I didn't really want to call that out because that's not really, great fundamental trading. It's more day trader bullshit. We try to avoid that for the most part. So, but it worked out. I saw the volume, I saw the momentum, bought some stock, kicked it. I didn't get any of my core position off. And then here's where I kind of fucked up, but the name is very wide. It went to 108.35 and it was breaking out, new all-time highs, huge volume. And then it was started to fail. And the low of day at that point was 98. So I gave a bunch of my core position to this 98. It didn't really mean much. I didn't really want to give the name back 25%. So that was a difficult decision I had to make. And you can see it's kind of a good trade and a bad trade where it's like, maybe if I kept my stop in this 91 area, I'd still be in it. But I'll tell you something. I was swinging a decent position, and the last 2 days in this name were fucking hell. Up and down 15 points. 1,000 shares. That's not that fun. It's not that fun. But so I got some kicks off yesterday. I got some momentum kicks off, and I maybe moved up my stop too quickly, and it's kind of fine. And they got me out of stock. I really think this name's going to like 140 or so. But you can see how some trades can be a good trade and a bad trade. And if you're trading these recent IPOs, they can be so batshit crazy. You don't want to focus on P&L, but it's hard not to when it's making 20% swings every day. So that's a pick your poison situation. I'm not sure where the good and the bad there was. I'm still figuring it out myself. What do you got?
All right, so I got a couple. If you want to pull up the first one is ANET. All right. So again, we've been talking a lot recently about trading the ranges, buying up a support, selling into resistance versus trying to buy the breakout and expecting continuation. So ANET is an example we talked about the last couple of weeks. I was buying up off support, caught a little gap up, and it was starting to flag and show some resistance under that 230 area. When it did, I raised my stop. I got stopped out, and now it's back near this price. So it's trading in this range now.
Anish wants to buy that back so bad right now.
I know. So that was exactly where I was going. Where now it's back to I was buying 212 and it's at 210 today. That doesn't mean I just want to buy it because it's a little doji and it held 205. when the real area of support down here is like in the low, 190s, 195. So I'm not going to rush back into ANET simply because it's back to my price. I still need to find a setup in it that's worth getting back in. And if not, I just pass on it. But these were similar examples in this next one, this TRV. Another similar example, kind of going back to initial question on these, when to get back in. So if you have Travelers up, let me know.
Yeah, I got it up.
All right. So for Travelers, I've been picking some up through this 115 area for some time now. Finally caught that move up to that retest. Again, we've been hammering on this lesson of that first retest back at a prior pivot tends to get a resistance. And you can see it's clear as day. That prior high was 128. It ran right into it, and it just couldn't go any higher. At that point, I had to raise my stop, and it opened the next day down, and I pretty much got flushed out. But if you look at it today, it's almost, it's closed at 119. So it continued to sell back off and pull back into this range that it's been trading in. But that similar example where if it comes to 115 tomorrow or 114, I'm not going to blindly buy it because the real out is verse 105. So for me, I'm gonna have to give it some more time to set back up and look to get big in versus just trying to buy the same price that I bought, a week or two prior. So hopefully those help with finish the question. And then lastly, again, we've been getting a lot of questions about this Snapchat, and it's been the chart wise, at least, is showing us a lot of similarities to how kind of Facebook story, back in 2012 when they came out. So we want to start with that Snapchat chart that I put up.
Yeah, no, it's there.
We can run through. Okay, perfect. So again, this is a weekly chart. So it had phenomenal earnings, gapped up huge, had 4 huge days in a row. This is a typical time where if you have a name like this and it's a winner, you want to take the profits in it. Where if you can be patient with it, especially with a good price, if it's if your cost base is below say $28, you're in a really good position. This is a great stock to hold if you can at least hold it for 6 months or a year. And the reason why I'm saying that is if you scroll over, and I'll show you the Facebook chart when they first came out. Yeah. It was a very similar story. Back then, there was no Snapchat, but Facebook was still in that almost to MySpace. Their IPO came out. They were a disaster for that first year, and they had that first big earnings break where they were able to really show they were able to monetize some money off the entire globe that uses Facebook. And that's when the story of Facebook started to change, and that's where it retested the IPO high and then was off to the races. But it still spent an entire quarter after breaking that IPO high, kind of just, running up to highs, pulling back into that prior retest. And that's where, there's no reason why Snap can't pull back to 30 or even into the 20s. But if you can give yourself 6 months or a year, there's no reason why it shouldn't be in the 50s or higher. And it's been kind of textbook following, what Facebook has done. So that was the main thing that, the major similarities I've seen between Snapchat story changing, similar with Facebook. I don't think it's going to be a $300 stock, but it probably still has some upside. Easily could be like a $100 stock in a year from now.
Yeah, definitely.
All right, so that wraps up my good trade, bad trade. If you want, Jake, we can go through some of the top ideas for the week.
Yeah, so, the last thing I want to do is really trade anything that's like pretty market correlated right now. I'm really not trying to do too much until the election's over with. This YMAB began to break out today. This name isn't too worried about the rest of the market. Very thin name, but, through this 44 area, that looks good. This NCNO, recent IPO, this one's kind of, down here at support. Going to watch that one to break higher. What else we got? Dada, Chinese grocery delivery business, booming. So I'm in this one from like 29. I only have a little piece left. I'm looking for the ad on the next leg. And then, what is it? And then this AMC. I like this AIMC. So big earnings beat. Just took out a macro level. Now gave us 2 inside days. After that, I'm going to look to initiate this one tomorrow, probably 44, maybe an add through IPO earnings day highs at 45. But these are the names that become the huge winners over the next quarter when they take out the huge macro level on earnings after big earnings beat. That's kind of the catalyst and the price action you want to see. So I like this AIMC a lot. What you got for me, big dog?
All right, so we have Crean, CERN that we took a while back, but
CRM?
It's still setting up under CERN.
Oh, CERN,
yeah. CERN through 74, still setting up. Your DraftKings, a little sneaky buyback.
Yeah. That one, yeah, I'm waiting on that one. That's not ready yet, but definitely soon.
Let's see what else. Microsoft.
Yeah, they had earnings after the close.
I got
to look into those earnings. Are they flat post market?
Yeah, they're still.
That's
I
wild.
see them at 213. Yeah, but that's where one like through 217, 218.
Oh yeah, tomorrow on earnings with the
yeah.
chart that could be really nice.
Mm-hmm. And then PRAH through 112.
Yeah,
big weekly level
in some time. Yeah,
macro. Yeah.
Hell yeah.
And that's all of them.
Nice.
The main ones.
Solid.
Actually, last we have this Visa. And this again, going back to Anish's question, we took it through 200 to 210, and we were talking about how we didn't want to buy it randomly back up through 200, and this is exactly why, because it was just a random that we had bought. Where now as it's coming back in support, we want to see it if it can hold 185, if it can flush through and turn back up. That could be a little tight risk add, but there's one on the radar.
Yeah, we got that one. We got that earnings after the close Thursday, I believe. So we'll keep an eye on those Visa earnings.
Yeah, so that wraps up that. I think we can jump into Book of the Week.
All right, you go first.
All right, so going off of last week, we did the Markets, Mobs, and Mayhem. So this is a book that's not $800 to buy. This is The Crowd. A lot of the lessons from this book are related in that book as well. Just not as many, stories. It's more just analytical stuff. But there was one line that stuck out so far, and it goes, "A long time is necessary for ideas to establish themselves in the minds of the crowd, but just as long a time is needed for them to be eradicated." And we're seeing that, in today's society with what's going on, it's not going to go away very quickly, because once everyone believes something, it takes a long time to kind of shift that narrative.
Definitely.
What about you? What are you reading?
I'm taking it back. I take it back to the old school days, reminiscence of a stock operator, my all-time favorite market book, first one I ever read. I can't recommend this one enough. I've been talking to a lot of new guys lately who've been asking me what my favorite books are, so this is one of my favorites here. Reminiscence of a Stock Operator. It was written in 1920, 30, 40 or something. All the lessons are still probably one of the most valuable trading books around, because just timeless trading principles. Hold your winners. That's where it came from. So, Jack Schway, Edwin Lefebvre. He's French.
Nice. Next week I have a good book that I just started that I'm sending to a bunch of members already. So we're gonna have to.
You're gonna make me wait. You're not gonna tell me.
Okay. No, you're gonna wait.
Oh man.
I'll send it. I'll send it to you.
All right.
You'll get it in 24 hours.
All right.
All right. So I think we wrapped it up.
All right. Wrap this baby up. See you guys next week.
All right, guys.